Oh, we've got a big outside high volume reversal on Nvidia that has been our stock of the year, and it has shown itself to be the price performer all year round, up over 250%. I think since we put it on the list, something like that. The interesting thing to note here is that it's good to keep a close eye on stocks like Nvidia because they're markers for potential market weakness going forward. If Nvidia cannot find a floor and regain its footing and start into new highs again, that's a clue that maybe things are not all well within market internals. We also see a number of these tech juggernauts that are languishing, from Facebook to well, Amazon can't seem to keep up with the markets, and it's it went up against its 50-day resistance, and now it's heading back down. Yeah, so Netflix is looking still okay, but again, these are all names that are worthy of one's focus as kind of a rough guide to how market internals are shaping up. We've got a few names on the list like QTNA and MYOV. These are not really doing much of anything. I know there was some fake-ins, fake-outs, but they don't really have much conviction in either direction, because of the low holiday volumes. So, but those are still obviously ones that may spring out of these little low volume patterns at some point. Not a whole lot's been going on. The commodities have been trading sideways as well, with little news to move them in either direction. Although today gold and silver are up nicely. Gold's up about 1.5%. So,
Dr. K,
yeah.
I think the gold and silver have been up the last 3 days because of the Italian bank. There's fears that they're going to go under or need a big bailout. So there's fears of some instability in Euroland, and so I think and then of course you have China as well, and I think this is kind of getting a fear bid right now. But it's possible you could see these two turn. So I did want to make one point about Nvidia, as you were pointing out. Do you consider this a climactic sort of top or potentially a climactic move?
Well, I think in normal markets, of which this is not one, it would not be a climax top. It would just be getting going. I mean, that would be true in the 80s and the 90s.
If you look at the weekly chart, though, I mean, this thing isn't just getting going. This thing's had a huge run. We put it on our list at, what, 35, 80, I think it was, down in here. And this thing has just gone bonkers since then. When did we put it on? Way back in April, right?
Yeah, it was in the 30s. We put it on well, we also put it on a viable gap up when it was higher, but before then, I think it was in the mid-30s, something like that.
Yeah.
That we first mentioned it, and then it got support along its 50-day, and then had that viable gap up. And then, there's been a couple other times we mentioned it, if people missed those buy opportunities when it had low volume pullbacks. So yeah, if you look at the weekly, I mean, obviously it's had a really good move. You could say that it's from 30 to 120. That's a 300% move. But again, back when market conditions were different, a leading stock like this wouldn't just go up 300%. If it was a true leader, it would be up a whole lot more eventually than 300%. But this kind of market environment it's very rare to see stocks pull an Nvidia. And it's very possible that what we've witnessed is the climax top for Nvidia. So again, it's important to keep a close eye on how Nvidia trades over the next several days, and also obviously the market averages. I mean, you have the Dow that just shot higher, and now it's just trailing sideways at 20,000 levels, dangling like a carrot in front of a donkey, and just can't seem to get past it. But on the other hand, I would not be surprised to see a shallow floor being found, and then the Dow eventually shooting through 20,000 with all the headline news, glorifying in the 20,000 level being pierced. But again, that would be also a critical level to watch, because we could get situation like back in, what was it, 99, March of 99, I think, where the Dow went through 10,000 and then promptly reversed. And that was pretty textbook, though. It had a high volume reversal after piercing through 10,000 and then corrected 4.6%. So these are all things worth watching for. But at the same time, you got to remain flexible, because it also wouldn't surprise me to just see the markets, baby step higher beyond 20,000. The Livermore century mark rule holds true, especially for a defining level like 20,000. So if it can get through 20,000 with conviction, like Nvidia did when it went through 100, and it went all the way up to 120. So that was a nice 20% move from the century mark. The Dow could do the same thing. In other words, it could carry the whole market higher. But then watch for serious headwinds. I think one of the big headwinds is something Gil just mentioned, which is the China factor. I mean, Trump is very protectionist and isolationist in his trade policies. The question is whether he will have the right advisors advising him away from that mentality, because we really need, the world's going toward collaboration, not isolation. And I know he wants to bring back the jobs and do all these things for the U.S., but by harming China, it ultimately harms the U.S. and harms the whole planet. So hopefully he's a pragmatist, and hopefully he'll get the right advice on that level. But that could be a serious headwind, because if the market perceives he's going to enact some of these draconian laws against China, and certainly Chinese stocks are reflecting that the way they've been trading, then that doesn't bode well for the markets. There's a lot of headwinds that could create some serious corrections within the stock market. So again, remain fluid, remain flexible as all this unfolds. We were talking about in one of the reports about the QE bubble that is in the room. It's a big pink elephant, and I don't know of a time when such a bubble has ever deflated gently. These are bubbles that burst every single time, and we're going into a rising interest rate environment, and that could be that could be the nail in the coffin. The perception that it's going to raise.
Or the pinprick. It'll be the pinprick that pops the big bubble.
Yeah, and that's the question. Is when we don't know when that's going to be. The markets could continue to be manipulated higher for longer than expected. A lot of these bubbles get a lot bigger than people can anticipate, which is why calling a top ahead of time is impossible, nearly impossible. But the best thing you do, in the way the timing strategies have always worked, including market direction model, which has been in use for a long time, is they just look day to day on price volume action. Selling pressure. If there's enough selling pressure, it goes to a sell signal, and it doesn't know the nature of that sell signal, doesn't know how profitable it's going to be ahead of time, but it has always been there on a sell signal when you get things like the flash crash of 2010 or 2008 or 2000 to 2002. It's March of 2000. It's in cash, then goes to sell. It's there. So that's my advisement to everybody, is just take a Zen approach to the markets, and don't try to predict, as tempting as predictions are, because predictions can also throw you. If you seem to accumulate all these reasons, very valid reasons why the market should correct, then it's going to affect your trading. And meanwhile, the market might march higher. This happened in 2009. It was very easy for many people, including ourselves, to think that the markets are really going to unravel even after they had unraveled in 2008. And yet, lo and behold, we had an outside wildcard factor called QE, which propped the markets higher very aggressively. So it's important to not outthink the market, because you'll end up outthinking yourself, and that will affect your profits, your trading, and taking that Zen approach is essential.
Yeah, I would point out, however, that doesn't mean don't think. I think you watch the stocks and act according to what the stocks are showing you. If you were watching, for those of you who use HGS Investor software, yesterday, Ron Brown, some of you may know Ron Brown, he's one of the principals over at HGS Investor, a friend, and someone we worked closely with in developing some of our tools that are put on the HGS investor software system. But he noted that several of the leading groups, a large swath of them, showed negative 10 to 1 on the downside yesterday. So it looked to me too, just I find it interesting that Ron is very quant oriented, and what he'll see on HGS Investor, I'll actually just see watching all the stocks trade. And what I picked up yesterday was a pretty distinct change of character in a lot of these leading names, of course, not the least of which is Nvidia. So, you know, and I remember in 2000, March of 2000, how did we know the market was topping? Is a lot of our stocks just went into climax type moves, and you sold into those and made a mint and then backed out. So Nvidia, I think, is a key clue here in terms of telling us we may be going into a deeper correction. We did that over the last 2 years in January. The corrections didn't last. They eventually did find a floor. But they were pretty serious corrections. Last January, or this past January rather, of 2016, market came down pretty hard if we look at the NASDAQ composite. So, you know, I wouldn't be afraid of QE. I would just watch the stocks because you don't want to miss a break like that if you can on the short side. And it could happen at any time. I tend to think, Dr. K, that things, the optimism around Trump is a little bit overblown. And I've always felt, being a libertarian, I don't really care much and have never voted for either of the two major parties. And I think they're just two sides of the same coin. I'm hard-pressed to consider how, you know, what he's going to do magically that's going to resurrect us from all of this debt overhang and all the structural issues. Now, I understand, you know, he can cut taxes, he can provide a more business-friendly environment since the Obama administration has been downright hostile to business. But I'm wondering if a lot of this is already baked into the cake, and as we start to see things unfold over the next few months, maybe the market runs into some trouble. But there are some significant differences compared to other times when we made new highs, is that you have the Fed now allegedly raising rates. Now, do you think they'll stay on a path to raising rates, or do you think they'll back off sooner rather than later?
Well, that's the $1 million question. I think the Fed
I'll
has
give
a
you a
mandate.
dime for your answer.
They definitely don't want to lose face, and the fact that they've now gone on record to say that they anticipate 3 rate hikes instead of 2 shows that they're hawkish and they have confidence in the economy. But meanwhile, the economy has some serious issues, and I think it's a lot of jawboning, which they're very good at doing. There's no question that they're going to hike when they can, because I think they realize they painted themselves into this corner. All these central banks have done so, and so they need to get the rates higher somehow so that they have room to move them lower when it's really necessary. I mean, in all the other past situations, all the other past bubbles, interest rates were higher, so they had that tool, very important tool, in their tool chest to move rates lower so that could jumpstart economies. And this time they don't have that tool, and that tool is essential. And I think they realize that. So I think they're going to use any excuse to try to move rates higher, and I think that is going to cause serious headwinds for the market. So I think we are going to see some serious corrections of sort sometime this year, probably sooner than later. And also, all we need is some, you know, negative news out of China, Trump news in terms of you know, further evidence that he's going to become more isolationist or, you know, more anti-China in terms of trade to upset the markets. I mean, we saw how upset the markets got in January of this year when China had economic troubles, and I think the NASDAQ corrected 21% very quickly. So yeah, I think we're in for more volatility. You know, and heightened. I mean, we got heightened volatility in the first half of the first quarter of last year, and then things have been relatively quiet the last few months, and I think we're due for another bout of some sort of correction in the major averages. I also wanted to add I think the Fed, if things get really sticky and we start to see, say, you know, a repeat of January where the NASDAQ's correcting more than 20%, I wouldn't be surprised to see the Fed reverse its hawkish stance to try to calm the markets and you know, take the rate hikes off the table and maybe even undo one of these 2 rate hikes that have taken place. But if they do that, then it just puts them back into that tight little corner. So they're really walking a treacherous tightrope here in terms of what they can do to help the situation. And I'm not sure how they're going to get out of it. I think the tightrope is, I think the tightrope's going to break.
I would think so too. So shall we look at some stocks?
Sounds good.
All right. Well, I'm going to go through some of these that you had mentioned earlier. For instance, Amazon. The thing with Amazon is if you look at I think we've talked about this before. If you look at the weekly chart, it's starting to have the look of a sort of head and shoulders. You have a break down the right side on heavy volume here. And now you notice if you look on the weekly bars here, let me get a nice pen color here that you can see. You'll notice in here over the last 3 weeks, you've been trying to get above the 10-week line, but you've been failing each time. You had heavier selling volume here 3 weeks ago. So you kind of got this sort of head and shoulders thing going on where you have this heavy volume here is characteristic of the right side of the head. So it's looking like a head and shoulder. Doesn't mean it has to play out that way, but that is certainly what it's starting to look like to me. And I think that this thing was a short at the 50-day line, probably still within range, but looking at it yesterday, I shorted this thing yesterday at the 50-day, or when it was up above the 50-day. I figured it would roll over because you're running up against this other high of about 2-3 weeks ago, and now you're breaking down again. And I think your volume is up slightly this morning, so it looks like it could break. So we'll see what happens here, but it's a big leader, and if this thing starts to break down, obviously you'll probably be seeing the indexes coming down at the same time. So another one is Facebook. If we look at Facebook on a weekly chart, that just looks like a big ugly bear flag to me, and it hasn't really been able to get going. I thought maybe as we go into the last week of the year, institutions might try to come in and support this name since it's one of their big holdings, but it looks like they might be more interested in unloading some shares ahead of earnings in January. So, I was hearing today that Snapchat will become the new Facebook and they'll supplant them, and that one surprised me because things are always moving forward. And there's always somebody building a better mousetrap. And I know a lot of people I know have migrated to Snapchat. So, but all you see here is a bear flag, and it's pretty. Let me make this bigger, and you can see here we have the break off the peak, which just comes on heavy volume. Now, this also would be reminiscent of the right side of a head. So you get a left shoulder here, a head, and then a right shoulder, and a lot of times the right shoulder is just a bear flag, and then it'll break out through the bottom and blow up. And this has actually been shortable. I thought it might get above the 200-day line, but I'll play this one either way. If I think it's going to rally, I'll play it long. If I think it's going to and up to the top of the range, so I'll look for a move like that. And you did have that a couple of weeks ago, but then I'll look at shorting it if it runs into resistance. And you can see that if you we're hitting it up here along these highs and near the 50-day line or even around the 200-day line a couple of weeks ago, you're starting to come down, but it's really not much, like 2-3%. So it's not a huge break yet, but this could top, and if this starts to break down in earnest, then you probably can surmise that we're getting into some trouble with the general market as well. And do you remember a few days ago when the Nasdaq made a new high? I think that was on Tuesday, first trading day of this week. It stalled out near the highs, and that was being fueled. Let me make this bigger too. You can see the stalling action 3 days ago up at the peak, and the volume was slightly higher. So they're selling into that, and the thing comes in pretty nicely over the last couple of days, and now we're breaking the lower lows and dropping out of this range. So you could see it pull in. Wouldn't surprise me to see it drop into the 50-day moving average. It's done that before, and it's only taken it a couple of days. So you're seeing some weakness in the indexes, I think. Whether that pans out in a more meaningful, substantial way is still sort of in flux. But another one to watch here is Netflix. And the thing about Netflix, that it looks bullish here, and I would say that, or it was looking bullish, I should say. And I like this kind of, you see right here, there's a little voodoo day where the volume dries up. It's sitting right at the 10-day line, and then it pops. But notice when it pops, you get a pickup in volume, but it's not enough for a pocket pivot, and it's not really close to being even average daily volume. So, you get near the highs, and you've got something of a double top sort of situation. If this breaks a 20-day here, which it's trying to hold right now, this could be trouble for it. But we'll see. We'll see what shakes here. So, but I'd keep an eye on these because I think they are barometers for the general market, including Nvidia, and we'll see how Nvidia ends up today. It's trying to get support at near the 10 and 20-day line, so in the 100 level. So it did hit a low at 102.80, so it got pretty close. It's trying to turn. I wouldn't be surprised. Sometimes if you do get a climactic sort of top in the stock, you will also see, you can see a reversal back up to the highs one time, because what happens is everybody sees this thing break. Because no doubt people have been trying to short the move up, because this thing has been called overvalued all the way up, but it just continued higher nevertheless. But people try shorting it, and then once it starts to break, they'll swarm it thinking it's just going to collapse. But things don't necessarily collapse all at once. They can take some time to develop a top, and a climax top can even noodle around. You can study some of the ones from March of 2000. They'll noodle around before they really break down. So I could see this thing possibly testing the highs and squeezing some shorts that are trying to swarm it right now. But I think for right now, if you were long the stock, you probably should have been selling into this. And if you recall last week during the webinar, I said if you get a Livermore century mark buy signal coming up through the 100 price level, then you probably will get 10-15% of upside. You got a little more than that, up to like 1920. But I mean, once you're getting up 15% from the 100 level in a hurry, then you could consider taking profits, especially if you're up 10 days in a row and you get a nice big move, sort of a climactic move on Tuesday, I think it was. Yeah, and then you reversed yesterday. So they smacked it pretty good off the peak, and that's some pretty heavy volume. We used to have a rule at O'Neill on the institutional side, and the institutional salesmen, some of the older ones, would talk about a stock would generally be topping when you see the heaviest selling volume off the peak in the entire pattern. So I think you got to watch this on the daily, but also where it was is on the weekly charts. If we do close down and the volume is the heaviest it's been, even in a short holiday trading week, when the volume's been the heaviest it's been in the entire run on the downside, that can often be at least a sign of a decent correction in the stock that will send it to the downside. So it's something to keep an eye on. But I would not get complacent here and fail to lock in some profits if you did buy it down lower. At least take half profits or some amount, and then you can use an ultimate stop at, say, the 100 level or the 20-day or whatever you want to use as a trailing stop in case things do get out of control. But the one thing you don't want to see is a large amount of your profits disappear, because I know a lot of people who were in love with Acacia, and I remember when it was up here, everybody was in love with this thing, and it was the next Cisco, and it was going higher, and it obviously topped and rolled over. And so things don't go to the moon, maybe halfway, but not all the way. And you can see that Acacia is kind of like similar to Nvidia in that it started out in the 30s and had a nice move, and then you had a gap up coming up through the 80 level, similar to what Nvidia did back in November right here, and that carried up as high as the 120 level so far. So there are some similarities between Acacia and Nvidia so far, but I don't know if either one turns out to be the next Cisco, and I'm not even sure what that means. Although, how many times, Dr. K, can you recall hearing a stock being called the next Cisco? I don't think I have enough fingers on all my hands and toes on my feet to count the number of stocks I've heard called the next Cisco. Have you?
Yeah, it makes good headlines.
But it's meaningless. It means nothing. What does that mean?
Most of these headlines are totally meaningless. They're not designed to help one profit. They're designed to take one's attention away from the profits. That's why news can be quite treacherous, and having news on all day, I think it would negatively affect one's trading.
Yeah, and getting hung up on these permanent bull concepts of something is the next Cisco. What does that mean? Do you just buy the stock and buy it up here and hold it forever? If you did that with Acacia, I even had people emailing me some fairly elaborate precedence analysis pieces showing why Acacia was just like Cisco, and right after it came public. I mean, if you're trying to compare Nvidia to Cisco, the difference is that Cisco came public in '91 and had a big move, and Nvidia, or was it 1990? I forget. But in any case, it had a big move, and Nvidia has been around for a long time. So, on the basis of them being IPOs, I think that Cisco and Acacia are more alike than Nvidia and Cisco. But I don't understand what that one means. I think it's just code for buy this, don't think, just buy this and hold it forever. And that can be fatal, as people who thought Acacia was the next Cisco found out. And on top of that, you got a stock here trading about 45 times forward estimates. And if you look at the estimates, even the ones that have been revised upward, you're still looking at about 17-18% annual earnings growth over the next 4 years. So they could be at the apex of their move here. And remember that the numbers, the fundamentals always look the best at the top. And right now you have to admit that Nvidia has some impressive fundamentals. So anyways, let's see some other names. I think you have to keep an eye on Apple. It's in a similar position like Netflix, trying to make another high here, pushing back up to the highs in a low volume. See, the thing with Netflix is it's trying to break out and there's no volume. And if you look at this, it's just holding up. Apple's just holding along the 10-day. Volume's drying up, so it's possible you could see a breakout attempt, or it could fail. But something to keep an eye on, as this could be an issue for the market. Qualcomm is breaking down, and that became a short. If you look at we took this thing off the list a couple of weeks, or last week I think it was. But notice the rally 3 days ago carries right into the 50-day moving average right here, and it stalls. You see that? And the volume's light. So I thought that was a good place to short it. And I actually held this overnight. I don't generally hold a lot of shorts overnight. And I held this overnight, and I got lucky because the next day there's news that South Korea was fining them $850 million or something like that for some competitive practice violations. I don't know, something like that. And the stock broke. It undercut this low here, so it's trying to rally, but it's not really getting anywhere. So I tend to view this as a short here, although I'd like to see it push back up into, say, the 20-day, which is around 67.02. So obviously you wanted to get short here at the 50-day and around 67 and change, and now you catch a little move to the downside. But this is looking troublesome, and so you want to keep an eye on this, because if this thing blows apart, this is another one that's indicating where the general market is going.
I just want to mention Amyov is trying to make a move. So
MYOB, yeah, it is.
Yeah, it hasn't been much of anything, but today it's making an attempt anyway. Looks like it'll be a pocket pivot of some sort.
Could be, yeah. It definitely is on track. Let's take a look at this. Whoops. We have to do an update, intraday update here. Give that a second. I want to check the volume. What's the volume level running at right now? Right now I'm looking at
43%, but obviously it's it had a
well, if I look at it on here, I can see
volume in the last 20 minutes.
It's on track. Hard to say. The volume doesn't look like it's. Gonna check something here real quick. Let me shrink this. There we go. The volume is, yeah, it's more or less on track if it stays at this pace to pull off a pocket pivot, another one. So that's looking okay. But that's kind of a thin name. It trades 300,000 shares a day. It's an $11 stock. So, if I go in there and start buying it up, I'm going to run it up $2 or $3. So, be careful. Someone's asking about Rice. RIC, oops. Is that a Rice Energy? What do you want to know? As a short? Is that let's see. What does it trade today? That looks like a short. I guess I would prefer to have shorted up near the 50-day moving average, but it looks kind of weak here. So I don't know. I don't know if I'd short it here necessarily, but you could try it, I guess, and use the 200-day line at 21.97 as a tight stop. So, but you're seeing a number of energy names breaking down. Continental, I think, is looking like it could be a late-stage failed base. Some of these are FANG. What's another one? Silica. SLCA has been making new highs. Goldman came out and put a buy recommendation on it up here, and it's continued a little higher. Kind of reminds me of Nvidia, because they came out and put a buy recommendation on Nvidia around 104, 105, somewhere in there, and the stock went up another 10% or so before it rolled over. And same thing going on here. Looks like this has gone to new highs, and now it's starting to roll over. I actually shorted this yesterday off the peak and got $1.50 out of it, so not short it right now, but it's continuing lower. Some other names that are trying to hang in there, but you notice how, this trade desk, it's a thinner name, so it trades 400,000 shares a day, but trying to break out. It broke out last week, but it's not holding the breakout. That doesn't look too good. That looks suspect to me. So let's see. Dr. K on MYOV, how do you get comfortable with fundamentals? When do you decide to accept zero revenues and earnings in a trade candidate?
Yeah,
In biotechs, they can frequently trade on no earnings or sales. So, but don't become a CanSlim cult member and think that the only way you can play stocks is if they have all the 5 earnings of earnings and sales up a certain amount, because all that's old news. And I think things trade today more on a forward-looking view rather than a backward-looking view, which is what everybody sees when they look back and say, oh, this company had 5 quarters of earnings up 20%. I think a lot of that model is not that doesn't hold up in every situation, especially biotechs. Your thoughts, Dr. K?
yeah. I mean, actually, in 1999, 2000, you had tons of these biotechs with no earnings, no sales, but they launched, they vaulted forward. And you just have to be aware that certain industry groups, you have to be more forgiving, and this is one of them, where it's more important to know the fundamental story behind the company and the products and its pipeline, the approval pipeline. That's obviously very important and can act as a catalyst to propelling the stock higher. So yeah, something like Amyov, it's an interesting story, and the technicals um, certainly are playing out. We had that pocket pivot a few weeks ago it was on the 23rd of November, and then the stock launched almost 20% in one day. The very next day, you take your profits. I like that about some of these IPOs. You can have these pretty volatile moves in your favor, but you have to be very quick to take your profits. And right now, it's been backing and filling for a while, and it's been quiet holiday volume, so it hasn't really done much of anything. It had kind of that fake out on the 23rd, where there was just enough volume for a pocket pivot, and then it backed in again, backed and filled again. And maybe it's going to do the same thing right now. That's the question is, you don't want to be buying these up too high, because then your risk is higher. And the time to buy these is when they're still quiet. And because then first of all, your stop is very close to where you're buying it. And second of all, when you get a day like today, then you're in the money, and you can cycle. You're now holding your position from a place of psychological strength.
Yeah, on this one, I'd try to buy it, if it dips under 11, but no guarantee it's going to go anywhere. It could also break down. The base is a little bit sloppy on the weekly, but it has had a lot of tight closes around the 1140, 1150 area. So that's probably the sort of your level of support right there. So any drops below 11 would probably be your best opportunities at picking up shares without disturbing the stock too much. But that's a thin trader though. That's tough to handle. So, but a good idea for people, I think, with smaller accounts. Now, somebody's asking how to enter a short position in Tesla. Well, I think you could have entered it yesterday because it goes past the 200-day line, and then you stall out, and if you're watching that, you see that stalling action, and you're using a 620 chart, you could have seen it reverse during the day. Now, I think if it busted the 200-day line, then you would want to use the 200-day line as your stop. So right now you're trading at 214.76, and your 200-day line is 214.56. You're 20 cents above that, so you'd want to see it break below. So if you're going to get short, I know somebody was telling me that they think this is a long-term bottoming pattern in a new bull market, and I don't know about that. I mean, I think that's kind of a stretch. Maybe wasn't this a bottoming pattern in a new bull market, because the market was actually rallying at this point. Here the market's already been up a long ways, and it's dragged names like Tesla up with it. So it's not, and you're seeing it stall here. None of the volume on a weekly basis has been above average. So to me, what you're doing here is you're just squeezing the shorts. It doesn't mean, however, that if you're a nimble swing trader, you could have played it after this bottom fishing or roundabout type pocket pivot right here on this day. And I think we looked at that a couple of weeks ago during the webinar, and it's gone higher. It's been a little choppy, and then you get another pocket pivot 3 days ago as it's going up to the 200-day. So that now if it starts to fail, I think you'd look for it to break the 200-day line, and then you would use that as your stop. Or you could short it on the break of the 200-day line, and since you're only, the highs up here are only like 3% higher than the 200-day line, you could use one of those highs as your stop if you wanted to give it some room. I would probably be more inclined to use a 200-day line if I'm shorting it underneath the 200-day line, and just use a tight stop there, and then see where it goes from there. If it turns and rallies, then I might just turn around and cover it and get out of the way, and see what happens. So GV, what is that? Goldfield Corp. 10-day pot. Well, that's we don't really look at 10-day pocket pivot clusters. I only look at clusters of 5-day pocket pivots. You only need one 10-day pocket pivot to consider a stock to be having a valid viable pocket pivot. And you had that 4 days ago in this, but you're seeing this in a lot of the metals names. So here's Agnico Eagle Mines is rallying. First Majestic Silver is rallying. You've got this one that you're looking at, GB. What does that look like on, let's see, yeah, that's actually rallied away. That may be a decent pattern, but it's a $5 stock. I just noticed that. Why was I thinking that was a $50 stock? I'm not really into $5 stocks myself, but I mean, it looks okay. But I think if you're going to buy any of these, you think the metals are going to rally, then what you'd be doing is looking for the other ones to go. If this keeps rallying, then you know that the bigger ones are going to keep going. AG, and I like SLW is another one. American Barrick is another one. I mean, just go through the list. To me, that's what's moving. So I'm not so sure that would be my first choice, given that it's a $5 stock. And what does it trade a day on average? 386,000 shares. That's just way too thin. So I think you're off track in terms of finding an institutional quality metal name. But that probably gets a lot of retail buying if you see the metals start to rally, so gold and silver. So because $5 they can buy a lot of it, but I'm not sure necessarily whether you can make a big gain from here. But my whole point would be that you can just go after some of the other miners if that's what you're looking for. So I wouldn't. Anyways, let's see. Somebody's pointing out or asking, I guess, about some oils that might be in trouble. APC. Yeah, this one's held its, Anadarko's held its breakout, but it could fail. I might watch for that. Apache is another one. That one's acted pretty well, but you notice now, here's the breakout back here in, right here. Here's the base breakout. So you clear the breakout on big volume, and now you're failing. And for those of you who've been around for a while, what is the first sign of a potential late-stage breakout failure? The breach of the 20-day moving average, which is this green line here. And so you had it yesterday on pickup in volume, so it's starting to waver. It's heading for the 50-day line. I think if you're going to short it, you had to hit it at the 20-day line. But there's some others, I think you can look at, whoops, I didn't want that one. I want CLR. That one looks like it might fail. It might be on the verge of failing. It's just under the 50-day line. So that becomes a ready reference. So one stock I'm kind of watching this morning, because it's jacking on some news, is Mobileye. And notice how it's pushing above the 50-day line on some news that they're partnering with another company to develop, driverless car technology. We'll see what happens. Right now, it's not quite. It's going to have to trade more volume for a pocket pivot, but I'm watching for some kind of a reversal. So far, not getting it. You had a little bit of a MACD stretch, but that didn't really work earlier. Let me show you the 620 chart if I can find it. I know it's here somewhere. Here it is. So you can see early in the day, you had this MACD stretch and cross on the 620 chart, and that was here. So, so it hung around here for a little while, and then if I test that out, what I'll do is maybe use the high of the pattern once the cross occurs. If I short it in here and it keeps going, I'll just cover. Or you can use a couple of percent of porosity and then see if it doesn't roll over later. So now I'm kind of watching this to see if we don't get some kind of a break on the 6-period line below the 20-period line. And right now you notice the MACD is sort of moving in the opposite direction as the stock continues higher. So my guess is you got a bunch of retail money buying into this, and they might be all excited because obviously Mobileye is like Nvidia. They have chips for driverless cars or driverless car technology, and so you got to run after this. So they're pushing it right now. So we'll see. But I keep an eye on it right now. For now, you're getting sort of this bottom fishing type of pocket pivot if it can exceed the volume here. So, but we'll just see how this plays out. So, anyways, but if I'm shorting it, I'd give it maybe the highs of the day or a couple of percent max, and kind of see just where it goes. If it doesn't roll over, then just back away. Sometimes you got to come back after these, but a lot of times, a stock that's been in a downtrend for a period of time can get a nice jack, and especially when it's like that, and that just turns out to be a shorting opportunity. And it could potentially, I guess, carry as high as a 40-week moving average. I mean, you got to, if you are trying to short something like this on the 620 chart, once it starts to roll over, you have to keep that in mind. So you always got to stop somewhere in mind. Let's see. Any other exciting questions? You notice that nothing is really getting any traction. Look at Twilio. Let's go to the daily. Looked like it might hold the 20-day line. Just busted it yesterday. Acacia, which supposedly was the next Cisco a couple 3 months ago, is just continuing to break down. It's making a lower low here, testing the low of early November. Some of the other ones that were working pretty well. Look at Impinj, trying to break out, but we know breakouts don't work. And if you did buy the breakout and you're using a 6, 7, 8% stop, guess what? You're stopped out. So you're better off buying down in here along the 10-day line after this big pocket pivot and trying to buy on the low volume weakness, which occurred about 2-3 weeks ago. And then as it breaks out, that's something I would sell into. Then I would be looking for a pullback into the 10 or the 20-day lines. And maybe if these can hold, this is constructive, but right now, I don't know, this is a thinner stock. It's a little dicey. It tends to be very volatile. If you see this breakdown in wholesale fashion, then you may have a problem. And that's what it looks like on the weekly chart. So you could argue that is an improper double bottom because the second low doesn't undercut the first low, and it's had a sharp move up. Notice how it's stalling on the way up on the weekly bars. So, that could be a dangerous name to mess with if you're trying to buy this thing. But I guess if you like it and you're not going to be buying too much, you can be nimble with it, then buying it off the 20-day might be possible here, using that as a tight stop. Somebody's got a question for you, Dr. K. You ready?
Sure.
Can you explain why VIX went to sell? Seems like odd time.
Here's the thing. It's very, very treacherous to try to understand why the model will do what it will do. It senses all sorts of things. In this case, basically what it's observed is we have a pullback going on, and it's the time of year it is. The stocks are doing what they're doing, and it sensed a very low risk entry point on the pullback. The signal is often a short-term signal, but in this case, this could be the pullback where then the XIV starts to march higher from here for at least a number of days. So anyway, the short answer to your question is it sensed a low risk entry point. By low risk, I mean the risk if the trade doesn't work out, the risk is contained to between 1 and 2%. And the upside, meanwhile, if the market wants to go ahead and move higher or even sideways, the XIB sometimes can counter that by going higher even in a sideways environment. And yeah, basically it's taking advantage of the pullback situation here.
So you're buying this on this pullback then, is that what you're saying?
Yes.
Okay. Yeah, I guess that makes more sense than buying it up here. So anyway, so I hope that answers your question.
Yeah, and an entry point was roughly 47.28, 47.3, something like that.
Okay. Let's see, any other questions here? We got about 15 minutes or so. We looking at some of these focus list names. This one is trying, SXC is trying to hold the 10-week line. The 50-day moving average is actually moving below the 10-week line on the weekly. But this is looking a little head and shoulders like, and I'm concerned here that this is another group of stocks that were acting well that may start to roll over. I want to take a look at something here. Some of these others, like ANET, for example, let's look at that one. That one's hanging in there too, but this looking like it could roll over, so I'd be a little cautious here. I certainly wouldn't be buying it up here. JD we took off of our list, and that's almost looking like a short here, using the 50-day moving average as your guide for a tight stop. Square has been hanging in. It's actually now it's at its 20-day moving average, so it needs to hold that. If it can't hold that, then it may have some problems. So, but you can see this in a lot of names. They're looking a little bit dicey. Mosaic had a nice, breakdown. Looks like it's going to blow up, heavy volume, and that just looks terrible, and then it rallies back above the 20-day moving average, and it's holding along the 20-day, but if it breaks down through the 20-day, that could be it. But this is what it looks like on a weekly chart, and I'm going to say that doesn't look like the most exciting pattern in the world. It just looks like it's traded back up to the highs of the range. So, yeah, I'm just very skeptical about the ability to make money on the long side in any meaningful way. And I think I made the point last week that in this market, it may not be so much what you do, but rather what you don't do. In other words, you don't get sucked into strength. You don't start trying to plow into the market because you think we're starting a new bull market. You just kind of hang loose and pick your spots and see where this market goes as we start the new year. Because we looked at the fact that last year the market started a rally in the last week of December here, and so you were rallying the last week of December, and then boom, you blew up in January, and you started selling off 2 days before the new year. And then if we go back to last year, let's see, we had the same situation. The market actually broke down in mid-December here. Yep. Broke down in mid-December here, and then had this amazing gap up and rally back up to new highs here on a closing basis, I think, or maybe on an absolute basis it made a new high. And then you sold off in the last day or two of, let's see, yeah, 12:30 and 12:31. You sold off in the last 2 days of the year to start a correction, and then just a choppy sort of move back and forth until you finally came out of it. And yeah, it's looking alternately bullish and bearish as it just chops around, and then you break out and you start rallying in typical QE market fashion. Look at all these moves up, and then they break, and it moves to new highs, and then you break, and you move back to new highs, and then you break, and you move back to new highs, and you break, and then you break real hard. That was in August of 2015. And that was a very difficult period. So that would have been 2015, I believe. Yeah, and so now we're in this situation where you're kind of trying to go to new highs, and you break, and now you're going to new highs, and you're rolling back again. So it's obvious that you don't ever want to be chasing strength in this market. So somebody wants to know, what was the biggest learning experience for you and Dr. K this year? I don't know. I don't think I had any real big learning experiences. I'm always learning, so I don't know if there was anything major about this year. Other than that, it's the same story, which is taking profits on a swing trading basis and working stocks within overall trends, but nothing really major for me in terms of like new revelations. It's still the same QE market, and you still handle it the same way. So how about you, Dr. K?
Yeah, I think, well, what made 2016 special is that, well, every year has become increasingly more challenging and more manipulated, and as we know in 2009, a lot of tried and true indicators fell by the wayside, and they've never really had their comebacks because the market's just gotten more challenging. But with all these challenges, it pushes you to a higher level in terms of your abilities as a trader if you're going to observe and absorb the lessons that the market's trying to teach you. And in this case, yeah, 2016, the first quarter was great in the sense that we got a lot of volatility and kind of a washout effect. But then the last half of the year has been some surprises with Brexit and then some more deeper outright manipulations starting with September 9th. We saw that the S&P since July has had its most shallow sideways move, which is a very difficult market to make much headway in if you're trying to market time. With stocks, it's been more difficult as well. Although, if you pick your spots, there have been the rare windows of opportunity that did open this year, and so if you were very diligent about taking your profits and you have them and keeping your stops tight, you could move your account up appreciably well, despite how difficult this year has been. So all that's to be said. It doesn't matter how tough a market is, as long as you remain disciplined and aware of the lessons of what the market's trying to teach you. Because again, this is a year where if you were not disciplined in terms of taking profits or quick to cut losses, you could easily reverse your gains in a matter of two days. And so all the difficult, challenging work that might have put your account up, say 15%, could evaporate in 2 days, and that's frustrating. But hopefully that's a learning experience. And then of course we saw the Trump election and how futures went lock limit down when it looked like he was going to win. And then the markets were off to the races with his victory. So there's been a lot of twists and turns in this market, and the VIX volatility model, I prefer to think of it as a strategy because it's always it's trying to learn from the data, and in tests that go all the way back to 1999, 2000, it's done extraordinarily well, especially in more volatile environments. And what this year taught me was you could have a situation like July to October where the S&P just doesn't move at all. I mean, it was more dormant than it was in the mid-'70s, which I remember William O'Neill saying was the most challenging time for him because you just didn't get any traction in either direction. But this was even a more shallow environment. So it brought home, that the model will have a difficult time in these types of situations. Fortunately, change is the middle name of the market, so we're not having, a prolonged sideways dormant period. It went from July, August, September, 4 months, which is long enough, and now it looks like the tone, the color of the market has changed once again. And as I pointed out at the beginning of this broadcast, I think we've got some pretty interesting headwinds on the way. So it'll be a matter of just watching, your price volume action in your leading stocks. That will dictate how you should position yourself to take advantage of any potential corrections that will surface in the coming year.
Somebody's saying they feel stupid missing the move in the banks. I would say just get over it. Don't worry about it. That'll happen. I mean, that's move, and maybe now they're going to roll over and you can short them. So I missed it too, but I don't really care. So I caught enough of other things not to feel left out. So, but
yeah, you look at also.
What? Go ahead.
I was going to say, if you're going to kick yourself about the banks, you can kick yourself about steel. Like, look at U.S. Steel, X.
Yeah.
That thing doubled. And here's a stock that doesn't have big moves. I mean, it's a slow mover, but this was an unprecedented situation, and to be able to predict ahead of time that this stock would all of a sudden come to life, I don't think that's a reasonable. You shouldn't kick yourself for that at all.
No.
This is a rare event that happened. It's rare meaning once in 30 years, and then the S&P doing what it did from July to October. That's the first time that's ever happened in the history of the S&P. And when I say history of it, I mean it started in the late 50s. So again, the model isn't, the VIX volatility model is not going to change a damn thing just because it was having tough time during those months. It's an aberration, and the market does sometimes deliver these aberrations, once every decade or two. And that's part of the learning how to trade is not letting that sort of aberration upset your trading strategies. I think it's very common. I've seen some people who throw in the towel, or they say, "This market's too difficult to trade. I'm giving up, or I'm setting this one out." But I think you can learn a lot of valuable lessons through these difficult periods that are aberrations. I mean, they will teach you, for instance, don't mess with your model. Your model works. This is just a one-off. This is a period that might only happen once every 5 or 10 years. So that should not affect your model. You just have to be able to put this difficult, challenging period in perspective. Therefore, you'll be able to profit again once the next window of opportunity does open, and it always does, even in a year like this. And that's what I liked about this year. As challenging as it was, there were still moments of opportunity to profit, as long as you kept really disciplined to your trading style. Gil, your mic is off.
I'm sure you'll find a lot of buyers in Nvidia here, which is, they missed this move, so people will want to, it's obviously going to keep going to 200, right? So they'll come in and buy, and then you get shorts come in and swarm it. If you're going to hit it short, I think you had to do it yesterday, and then you'd be covering today. That's how I would approach it. And now, like I said, it could retest the highs because, number one, you'll get a bunch of shorts swarming it, and they're not going to get any instant gratification, so they'll be squeezed and forced to cover. And meanwhile, you'll get in the late greed, which is everybody who saw the move and wants to believe that this move will continue ad infinitum. They'll come plowing in here to support it, and that's why sometimes if you get a climactic type of move in a reversal, you can see a move back up towards the high. Sometimes even go just above the prior highs. So yeah.
Actually, what'll be interesting in these. When a leading stock tops, it gets very volatile at the top. So
Yeah.
watch for that with Nvidia. I mean, if it starts to get very erratic and sloppy, that's a very good indication, and also a short selling opportunity, porting into strength in that kind of pattern. I've studied these tops going back decades, and it's pretty fascinating to see that so many of them play out this in the very same way. But that is it. They become erratic. So you really need to be shorting on strength, so you keep your risk to a minimum.
Some other names I'm noticing. Here's the nice one. It looks like it's going to break out reverses, and now it's sitting at the 20 line. Watch these names too. These are the infrastructure stocks. They're holding along support for now. If they start to break, that could be a bad sign for the market. Just like we were looking at X right now, that's starting to wobble along the 20-day line. It's had a big move, so this could fail. So these have been the names that have been leading the market. So over the last couple of days, there has been a change of character with some of these names. And I think that it may be flagging that we're in for something of a correction come next week once we start the new year. But we'll see it when it happens. But like I said, and I'll emphasize it again as we're in this last week of the year, it may not be so much what you do as much as it is what you don't do. So you don't do much right now. Hang out, wait to see what happens and how this change of character in the general market plays out over the next few days and few weeks. So just play it that way. So just real quickly, some other names that might be interesting. Here's Finisar, which is a late-stage failed breakout. It's rallied right back up into the 50-day moving average. We were looking at these last week. Light is another one, and we thought, this could go either way. It looks like it may want to break down, but notice how it's holding the 50-day moving average. So if you try to short this on the break of the 50-day, it's trying to hold, and I think it's just above it, like a penny above it right now. But I think on the break of the 20-day is probably where you'd want to come after it. But this is tricky, It's just chopping around, but it could eventually break down. And remember, we have earnings starting next month, so a lot of these stocks could go nowhere until earnings. And then you get the breaks or the rallies after earnings. So anyways, that's all I've got. Got anything else to add, Dr. K, for the final webinar of the of 2016?
I think we're good over here.
All right.
It'll it'll be an interesting new year. I'm looking forward to it.
Yeah, and everybody have a safe and sane new year, and we'll just see how things start out next year. You know, I'm up 4 years in a row, uh, and looking for another one next year. So we'll see what happens. And that's it. So anyways, thanks for showing up, guys. We'll catch you next week in the new year, or next year rather, if I want to be clever. Of course, that's a joke that everybody's using. You know, you run into a friend, it's like, oh, see you next year. Yeah, so you're going to see him next week, right? Anyways, so we'll see you all next year. All right? Have a good one, you guys. Have a great weekend. Have a great new year, and we'll catch you.
Take care, everyone.